Hello and welcome to In the Know Crypto. Today is February 23rd, 2022, and I'm your host, Clarence Thomas, not Supreme Court Justice Clarence Thomas, but the crypto guy, Clarence Thomas. And this is the very first video of my new YouTube channel, In the Know Crypto, where we talk about cryptocurrency investing, digital assets, news, and just overall education so that you can make better informed decisions about your cryptocurrency investing and your financial future and the huge opportunity that we have over the next 1 to 2 decades as this asset class known as crypto continues to explode. And so before we get started on today's topic, which is a deep dive into or a crash course into the very important fundamentals of Bitcoin specifically, I do want to say that I'm not a financial advisor. I'm just a dummy on the internet that loves crypto. But I have been in the space for 4 years. I've spent a tremendous amount of time studying and investing. And I feel very fortunate to say that 3 years into my crypto journey, I was able to retire at the age of 39. And so I want the same for you. Whether you get those exact results or not, I do believe that many of you watching this will have the opportunity to obtain life-changing wealth over this next decade or so. And so we're going to dive right into that. Also, just to add real quick, if you like this content today in the video, please consider liking the video and also subscribing to the channel. I'd really appreciate it and really look forward to growing the community and the many great things to come. And so now also, if you don't like the content, that's okay too. Either way, I would love to get your feedback. So please feel free to comment below and I will try my absolute best to respond to all of the comments. So starting off, back to the topic of Bitcoin specifically, because that's what this video is about. It's specifically not only understanding Bitcoin, but why I believe, why I have a high level of confidence, why now is the perfect time, if you've not already invested in crypto, to start getting in the crypto market. In fact, if you're if you're part of the 71% of people that have gotten into crypto over the last year, and maybe you got in because someone told you about it. You heard that prices were going crazy. Maybe you heard Elon Musk talk about it on Saturday Night Live or something like that, and you went in and bought some. Maybe you didn't understand it well. I want to help build a level of confidence in you that I have for the long term. Now, the day-to-day price action, we're going to talk about that too. I don't have a crystal ball. I see a lot of people trying to predict what's going to happen tomorrow, next week, even in a few months. They're always right some of the times. Just like me, I'm always right sometimes. But anyway, let's jump in. So the first thing is that I made a few notes here on the side. I spend a lot of time trying to think, well, how can I best describe Bitcoin? Because so many people that I speak to, highly intelligent individuals, business owners, highly educated people, all the above, and they say, well, okay, CT, I get it. Okay, there's this magic internet money. Well, what the hell is it? What does it do? Why should I buy it? So in summary, and then now you could spend, to fully understand Bitcoin, a few hours. By the time the end of this video, for example, should give you good understanding, but probably 2 or 3 hours grand total. You can have a decent understanding of what that is. And again, that's the intention of this video. But probably a couple 100 hours, you could understand it quite well. And I've studied it for thousands upon thousands of hours, and I constantly learn new things every single day, all the time, about this asset class. So it's constant education and learning is what it's about. So in my own words, how can I describe Bitcoin? It is, first off, it's an extremely scarce, and that's what a lot of what we're going to hone in on today. It's very scarce, highly portable digital asset. It's non-sovereign, meaning that it doesn't belong to any government. No government has ownership of it like they would, let's say, a dollar or a euro or a yen or a pound or etc. So no government owns it. It's fully open sourced, which means that anyone can plug into the Bitcoin network, add value, support the system, and they can be rewarded for doing so. And nobody in Bitcoin, nobody can stop them from doing that. But at the same time, it's also fully decentralized and it's censorship resistant, meaning that it is not and it cannot be controlled by any one person or organization. Not even the person that created Bitcoin, that invented it, Satoshi Nakamoto. No one can. It is governed by immutable law. And we'll discuss that more in this video. In summary, in the current times, when global inflation, when the price of goods and services are exploding around the world, literally the highest that they have been in 40 years, literally, and government issued currencies are being printed faster and in higher volume by far than ever. Bitcoin is not only the scarcest, the scariest, fiat government issued money is the scariest. Bitcoin is the scarcest asset in the world, and the demand continues to grow for it exponentially by individuals and by institutions, to the degree in which it is literally has the fastest adoption rate of any new technology, disruptive technology in human history. That's massive. So without further ado, let's take a look at some charts and some statistical data here. And so now looking at the actual daily price action is sideways for Bitcoin. Use that term very loosely. And for the week, it's down 14%. And so lately, it's taken quite a beating, which is why I'm encouraging people that are considering to get in to start looking to get in soon, because under $40,000 is an excellent entry point. It's about Bitcoin recently, back in November, got as high as $69,000. And so it's fallen about 45% off of that all-time high. And so if, again, you're one of the 71% of the people that's gotten into crypto over the last year, which is a testament in the growth and adoption of crypto, which we'll discuss further. But if you're part of that 71% that has actually gotten into crypto, then maybe you've gotten frustrated. Maybe you bought at $60,000 only to watch it fall to $30,000, then rally back up. Maybe you heard from a lot of people that it was going to $100,000. I'm guilty even. I thought that it was going to go to $100,000 in 2021. That didn't happen. It bounced off of $69,000 and now it's back down. And so this can very much frustrate someone that's new to the space or someone considering getting into the space. And so there's a couple things here. I want to first clarify that it's very easy to confuse volatility with risk. And so you can see something that drops. The biggest question that I ask myself is, will this asset be around in 5 years? And do I believe it will be worth more than it is now? In Bitcoin, yes and yes. Bitcoin has been attacked by many governments who've attempted to ban it over the years. In 2013, in particular, there was a hack on an exchange called Mt. Gox, and millions of dollars worth of Bitcoin was stolen. Again, several countries have tried to ban it. India repeatedly says they want to ban it. They don't want to ban it. Last July, China kicked out miners for that mine Bitcoin. Totally kicked them out. The governor of Texas said, "Hey, come over here. We're going to hook you up with some wind power." And Texas wants to bring you in. And so that's part of that decentralization. When one government attacks it, another government just picks it up. And so with that, there does come a lot of volatility. It is a newly emerging asset class. And so there's a few reasons for that volatility, and you heard me touch on sometimes, yes, when you get governments that attacked it. Now, most governments, in particular U.S. government, has actually warmed up very much to crypto assets as a whole, and so that is great for the overall adoption. But as potential legislation comes out, that affects the price. Another thing that very much affects the price of crypto is crypto, unlike stocks, crypto is a 24/7 asset class. It doesn't go Monday through Friday, 9 a.m. to whatever. New York time, it's a 24/7 thing. Also, there are a lot of exchanges that allow someone to trade, do short-term trading with leverage, as much as 100 times, 100x leverage. And so if a guy in Singapore could trade Apple stock at 100x leverage at 11 o'clock on a Sunday night, Apple would be just as volatile as Bitcoin. So that contributes to the overall, that's part of the reasons of the overall volatility. Now, again, having said that, speaking of new asset classes, if you just go back and look at Amazon as one example, Amazon obviously came out and launched in 97, went from $1 all the way up to $100 at the peak of the dot-com bubble, crashed all the way back down to, I believe, under $7 at one point, and extremely volatile. That was over a 90% correction, which Bitcoin has had over the years, 80 and 90% corrections. But Amazon continued to be a very, very volatile asset class. But guess what? If you had bought anywhere back here and you had held it today, you would be a very, very happy person. You would probably be retired. Even if you bought at the peak of $100, you would have made 30 times your money just by being patient. Within that, you had some stomach churning volatility, just like you have with crypto. But over time, with the long term, you see where things came. Bitcoin and crypto is being adopted even faster than the internet and cell phones adopted, and we're going to cover that as well. Now, you hear me talk about the charts going up. You hear me talk about decentralization, but you may say, okay, ultimately, if there's no trust in the system, if the system itself is not secure, because it's open network, it's actually the best way to summarize it, it's a software. Crypto is nothing more than a software. It's an open database. But what protects Bitcoin specifically is its hash rate, or how it's measured. It's ran by miners. The process is known as proof of work. But how do we measure how safe and secure the system is? That's based off of hash rate. So you see this website, Glassnode. You can sign up for this for free, and you would get this within the free version. You can get this information. I'll make sure to link that down below. There's also a paid subscription where you can get a lot of details. But if you want to start out, most of the stuff I look at is the free version anyway, quite honestly. But you can see the history of the hash rate here. Now, just to zoom in a little bit to a little more recent times, you've seen it recently hit an all-time high, but it continues to trend upward. Now, I did make mention of China last July. It was actually when they banned miners. They kicked miners out. Now, a huge percentage, I don't remember the exact percentage, I think nearly half, don't quote me on that number, but of all miners were actually in China. And so when they got kicked out last July from their government, the hash rate dropped because the amount of miners supporting the network had fallen suddenly. And so that created a major vacuum. And so the hash rate actually dropped. Now, this might be, and I believe it is, maybe the single biggest drop in the hash rate. So again, what happened? They went to Kazakhstan and they went to Texas, where I was a resident for a very long time. And so the governor said, hey, come over here. They relocated, and you see, it not only did we return back to the hash rate, we blew past it to all-time highs. And so the network continues to get stronger and stronger. So the fundamentals of Bitcoin are still here. And then these are the times that I absolutely love, when you see such a divide between the fundamentals growing exponentially and the price, because the price is a liar. The price of any asset tells the truth at any time. But most assets tend to either be way overbought, where they're hyped up and people are buying it, or it's way oversold and everyone's scared and overselling it. I believe we're way oversold right now with Bitcoin. And so if you look at, now I know that Warren Buffett is not a huge Bitcoin fan. He's historically spoken out against it, calling it rat poison. He called it rat poison squared, but you can learn a lot from him. He's one of the best investors that's ever lived. A lot of his fortune, dare I say most of his fortune, was made when he bought Coca-Cola. Back in the 80s, Coca-Cola dropped, massive sell-off in the markets, and then he said, well, are people drinking less Coca-Cola? Did someone die from drinking Coca-Cola? Is some country banning Coca-Cola? No. It continues to become more popular. It's the strongest brand, arguably the strongest brand in soft drinks. It's way down. I'm backing up the truck and buying, and that's exactly what he did. And the rest is history. He bought, and he never sold, and that's made him billions and tens of billions of dollars from that single purchase itself. And so I believe we're at a very, very similar point right now in Bitcoin specifically. Now, could it drop further? Absolutely it could, which is why I highly recommend dollar cost average. Begin to buy a little, and hope it drops in a way, and it drops and you continue to buy more and buy it cheaper and cheaper. You don't have to come buy everything all at once. Now, something I want to touch on, because you heard me refer to Bitcoin being a scarce asset, and this website is taking a long time to load. I apologize. But you heard me talk about Bitcoin. I'll come back to that. Bitcoin is a scarce asset. Now, there will only ever be 21 million Bitcoin. Ever. Now, what I also love about Bitcoin is right now, you can call it 19 million Bitcoin. That means 90% is specifically 90.32% of Bitcoin already exists. So in the first history of Bitcoin, it was you can say it was inflationary. A lot of coins were being created. That's how miners get rewarded. When I said that people get rewarded for contributing to the network, they get paid out, so to speak, from the Bitcoin network in Bitcoin. Every 4 years, there's what they call a halving event. That means that their reward gets cut in half. So over the first 13 years of Bitcoin's life, we've hit 90%. There's only 10% to go. So we have 18,966,500 Bitcoin exist right now. Now, the reason I love that, now gold, and a lot of people make comparison to Bitcoin and gold, and there tends to be this argument of which one's better. I'm not attempting to make a video to argue about how bad gold is. I'm just saying how much I love Bitcoin. But what I'll say is this. Ask anyone, any professional that deals in gold, say, hey, how much gold exists right now on planet Earth? How many ounces of gold? Ask any real estate professional, how many buildings are for sale on planet Earth right now? How many are empty? How many are sold? Land, how much land is available? Silver, how much, etc., right? Hard assets. How many diamonds exist in the world? You don't know. You can get an idea, but you don't know. With Bitcoin, I can tell you, in fact, I just did tell you exactly how much Bitcoin is in circulation right now, and you can get that information at any time. And there will only ever be 21 million Bitcoin created. That is ruled by immutable law. Nobody can modify that. And so the remaining 10%, the remaining 2 million Bitcoin will actually be mined, will be created from now for the next 118 years until the year 2140, where the last Bitcoin be created. So we've now hit this space where it's become extremely scarce. In fact, it's hard capped, not just scarce, it's hard capped. It's become extremely scarce, and the demand continues to grow. And we're going to talk about the demand. But getting back to the supply, now I also want to make a comparison with the amount of US dollars. This doesn't even consider Brazilian reals. I spent a lot of time in Brazil. Their money's lost half of its value over the last 4 years, and lost 70% over the last decade. But what I will show you is this is the amount of money that has been printed. This is from the FRED website. That's the Federal Reserve Economic Data. This is an independent entity based out of St. Louis, and they gather information from various sources, mostly the Federal Reserve and other government sources, on many different statistics, inflation and labor statistics, a lot of different things with the macro overall economy. But this shows the actual money supply in terms of dollars that have existed. Now, to give a little bit of a history, we went off of Richard Nixon. The U.S. President Richard Nixon took the United States off of the gold standard in 1971. I believe it was August 1971. Don't quote me on that, but it was for sure 1971. We were taken off of the gold standard. We had a lot of bills due, the very short version, but we had a lot of bills due, and they said, hey, you owe U.S., you owe such and such X amount of tens of millions of dollars for this and this and this. And he said, well, hell, oh, you need dollars? I can get dollars. In fact, I got a dollar machine right here. And they continued to print. Prior to that, a dollar was actually tied to a set amount of gold, and that could not deviate. Once we got off the gold standard, now suddenly fiat money, fiat's just a fancy term that refers to government issued, like dollars, like yen, like euro. But when fiat, we came totally off the gold standard, and we started printing a lot of money. We had horrendous inflation all the way through the 1970s and 80s. Particularly 1982 was a horrible year, the year I was born. The last time we had inflation as high as we actually have right now. But if you can see here, in 2008, when the financial crisis started, we had an explosion in money printing that occurred. And so that started, and it continued throughout the 2010s at an accelerating rate, as you can see here from the chart. Now, where it really got turned up was in, everyone knows what happened at the beginning, the first part of 2020. Of course, we had the pandemic that happened. The world came to an absolute standstill, and people needed money, businesses needed money, and so we turned up the machine like never before. And we proceeded to print something like $6 trillion out of thin air. That's 40% of all dollars. I'm not even getting into euro or anything else. That a lot got printed too. Just dollars. 40% of all dollars in existence did not exist 2 years ago. Let that sink in. The first dollar as it is was printed in 1913, as it stands today. So for over 100-year period, we had very low printing in the 60s, etc., because we were on the gold standard. Then we started to accelerate. That really picked up in 2008. Now, I don't think it was a coincidence that Bitcoin was created in 2008. In fact, Bitcoin was the answer to the big banks and the corruption and the mortgage crisis, the banking crisis of 2008. But it continued to accelerate, and then it just went into stupid territory like we are now with the amount of printing. And so now that we've looked at the chart of just the magnitude of the amount of money printing over the last 2 years and frankly, decade plus, well, let's look at our inflation numbers. This article from USA Today a couple of weeks ago, when literally consumer prices, inflation reached its highest point in 40 years at 7.5%. Now, to clarify, that number is really skewed because if you're going to purchase beef, chicken, pork, milk, any types of food, gas, any of those consumer products, if you will, it probably grew by a lot more than 7.5%. Beef alone went something like 25%, depending on what region you're on, in the United States. But this percentage of 7.5% is just that. It's an average. So the powers that be say, okay, we have beef is up 25%, but oh look, flat screen TVs are down 30%, right? And I'm just making up that number, but they look at things like electronics, things where the price has actually dropped due to innovation, and then they can butt that up against things that people actually use on a day-to-day basis. And so the number for most Americans, and this doesn't even include the world, which Brazil, for example, has horrendous inflation, but this number is actually skewed. I think it's much. I think anyone that goes to the supermarket or buy anything on a daily basis can clearly see that it's a lot higher than 7.5%. And I don't think it's any coincidence that we printed 40% of the U.S. dollars in the last 2 years, and suddenly we get rampant inflation. Now, by comparison to Bitcoin, while it is extremely volatile on the day-to-day, month-to-month, etc., it has had a growth rate of just under, let's call it 200%, a 200% compounded annual growth rate. If you compare this to gold, and again, not a bash of gold, it just happens to be in the chart, the S&P 500. The S&P 500, is grown at an average of about 11%. But if you have inflation that's 7.5%, then this only equates to 3.5%. Let's call it 4% of actual buying power that you're growing. So, in order for an asset to even keep up with current inflation, it has to be at least 8%. And again, I think that number is extremely skewed. And so, even the powerhouses, Tesla and Amazon, anyone that's bought those stocks in the last years have done extremely well. Everything has paled in comparison to the exponential growth rate at a 200% compounded interest annually, and it will continue, in my very strong yet humble opinion, it will continue to compound and continue to explode over this next decade. And so now, referring back to the adoption rate, because you keep hearing me say that, okay, I looked at price, got it, Clarence, looked at price, okay, it goes up, but then it goes down. Scarcity, and you say, yeah, well, we have a lot more U.S. dollars and euro and other currencies, okay, but people actually use dollars to buy stuff. It doesn't matter how scarce something is, if there's no demand, then it doesn't matter. It has to be supply and demand, and that's where the price increase comes in. Now, if you look at this chart produced by BlackRock, by the way, BlackRock is actually the world's largest asset management firm on planet Earth, and they are huge advocates of Bitcoin. But they produced this chart that actually shows the adoption curves going all the way back to the electricity, radios, etc., right? Telephones. And you can see from the early 1900s, the adoption happened, but it took place over a period of decades to adopt. And so you had people that were using telephones decades before some other people had telephones, right? As we got into the 1990s, you see the rate of adoption of new disruptive technologies goes straight up by comparison. Everything up really through 1980, curved and took a while. 1990 and beyond, with the internet, cell phones, video games, etc., is hockey stick, is straight up, is the adoption, right? And so if you compare if you compare these adoptions, but then you also look at this report that came out from Fidelity. By the way, Fidelity is the world's third largest asset management company, and this month, a couple of weeks ago, they had a teaching a Bitcoin for Businesses conference that they were part of, and they declared that we are a Bitcoin first company. That is a powerful statement, but they show just by some comparison, loose comparison of internet users in the adoption mobile phones to Bitcoin is outpacing even those assets in the amount of adoption and in the amount of users, the amount of people that are accumulating. And I keep saying Bitcoin, they're using that, but crypto as a whole is being adopted exponentially. And so, in fact, I will link. This is a very insightful report put out from Fidelity. I will make sure to link that in the comments or the down below in the video. They also produced a white paper detailing very much what I'm explaining now about Bitcoin and cryptocurrency, and explaining also some other cryptocurrencies and the problems that they solve. Again, I will link those below. However, in summary, because you heard me talk about the rate of adoption, so we talked about the scarce supply. Nobody can stop it. It can't be controlled by anyone. The high level of increasing demand. Now, here's what's also extremely interesting. This came out, I pulled this from a report from Cointelegraph, and it shows the adoption cycles, right, of any new innovation. And so you start out with the new innovators, the early adopters, which we're entering this phase really between early adopters and early majority. We're right in this phase. And this particular phase of any adoption cycle is it's interesting. The reason I say that is because if you go back and study the rate of adoption, any of these technology I referred to, radio, television, electricity, microwave oven, etc., whatever time frame it took to get to about 10% adoption, that same amount of time is what it took to get from 10% to 90% adoption, right? And so what I mean is, in the first 13 years, we're right around that 10% period. And I'll talk some specifics in a moment. But if that is an indication, the first 13 years we've gotten to roughly the 10% area. That to me signifies, I think there's a very, very high probability, a very strong possibility that we will reach 90% of adoption in about the next 10 to 15 years, perhaps 20 years. And so just to give you an idea, there was a recent survey conducted in the United States in which 16% of respondents said that they did own some cryptocurrency. Quite a high number. Now, compared with that, I've seen other numbers that say European citizens own about 4%. And obviously, it depends a lot, because if they ask perhaps an older generation that maybe they only like gold, they don't care anything about digital assets. And not insulting anyone, I'm just speaking very, very loosely. But it's hard to know that number. But even when you look at the 16% of U.S. citizens and 4% in Europe, maybe gets somewhere around 10%. Now, globally, there's really only about 2% of the world that's using crypto, that has invested in crypto. And so you can use that as well. I don't like to just sell the positive points or just what I want to convey to you. But what I will also say is, if you look at between U.S. and Europe, that represents just over half of all the world's wealth as well. And so obviously wealth has a huge part of what's being actually poured into Bitcoin. And so that's why I'm still very, very confident that, give or take about a decade, roughly that, anywhere from 8 years, 15 years. I don't know. I'm throwing around a lot of different numbers here, but around that 1 to perhaps even 2 decade mark, I think we're going to see massive adoption in crypto. And I think this we are living through the largest wealth transfer in human history. And I think that cryptocurrency, I'm certain that cryptocurrency is the tip of that spear. It plays a huge part in that newfound wealth. I want you to be part of that newfound wealth. I want to be part of that newfound wealth. And so, ladies and gentlemen, I hope that you found some value in this video. Please, again, like, subscribe if you like the content. Share it with those who may get some value out of it. See you tomorrow, and stay in the know and stay crypto. Thank you.